Hello and welcome back to the For the Property Investor podcast, and we've got another weekly segment of the weekly news. And of course, joining us who brings the weekly news is the amazing Nick Bendel.
You are too kind. Thank you, Owen.
Yes. Well, how's it been the last week, Nick? What have you been up to?
Well, it's been a very good week. I'm in Sydney, where it's been raining non-stop for the past week, but it was still an enjoyable week. And on the work front, I own a business called Hunter and Scribe, which is a copywriting agency that writes content for finance and property professionals. And just to give you an idea of what we've done over the past week, we've written social media posts for mortgage brokers, buyers agents, accountants, financial advisors, and lenders.
Right. Any notable newsworthy pieces that you've written in the last week that have?
Well, we might discuss some of that news very, very soon.
Right. Okay. And yes, busy week for us at Leafield. End of month, which is always a big week. Because that's when everyone gets paid. So yes, it's everyone likes that time of month, but it's always a busy month. But we've got our first management signed up and for Adelaide, and getting quite a bit of interest for our other segment, our expert series segment on the podcast, where we interview buyers agents, sales agents, even other property managers, mortgage brokers, other professionals within the industry. I'll get it out. And yes, good to see that segment is growing as well. Just to follow on from last week, we had a bit of a contentious question out there about. We were talking about Toowoomba being the second largest inland city, and we were scratching our heads at the time going, what's the biggest? And it's just like, is it Tamworth? No. Is it Wagga Wagga? No. And it's just like, and a shout out to a few of our listeners who did reach out to me and tell us who it is. Now, to be fair to us, we did look it up after we'd finished the recording the episode, and yes, of course, it's Canberra.
I've heard of it.
Yes, you can't blame us for forgetting about it though. It's quite forgettable. Yeah, don't send in the hate mail if you live in Canberra and like it, but you know. I mean, maybe let us know if you do live in Canberra and you like living there. Tell us why. It's I mean, apart from the stable job opportunities and the living in a bubble sort of protected bubble type of environment. Tell us what's good about Canberra. I know it's quite close to there's a lot of nature. It's surrounded by a lot of nature, so that would be nice. But apart from that,
I'm pretty sure we don't have any more Canberra listeners now, Owen. I think you've done a wonderful job of alienating them. Thank you for that. Now, in defence of Canberra, it's funny, I live in Sydney. I've been to Canberra maybe 7 or 8 times in my life, so not too many times when you consider that I am not too far away. I do like Canberra.
Hang on, does that include all of the school excursions?
Yes, it does. It includes school excursions.
All right, take out the school excursions. How many times have you been to Canberra as an adult?
As an adult, I reckon half a dozen times.
Okay, all right.
And I do think it's a really nice size for a city. So as much as I love Sydney, there are times I think, oh God, it's just too big. Wouldn't mind living somewhere smaller, maybe Hobart or Darwin, or maybe Canberra. Canberra's a good place.
I really like Hobart too. So it's yes, and I agree with it. It's Sydney, great place, but it's can be a bit can wear you down at times. Yes. So
I am still a bit embarrassed that we just could not think of Canberra. That is very
It's
embarrassing.
like
I don't think we should be defending ourselves.
Yeah, is it technically a city? I mean, yeah, but I suppose now it is. Yeah, it's not just which government department do you work in. Yeah. All right, Canberra, we do love you. You do a great job some of the time. But the people are lovely. Um, all right, what's in the news this week, Nick?
Well, our first story today, Owen, property prices keep growing. Australia's median property price rose again in April, marking the 15th consecutive month of growth, according to CoreLogic. Looking at quarterly growth numbers, we can see that three capital cities are recording strong growth. So Perth had 6% quarterly growth, Adelaide 3.3%, Brisbane 3.1%. Four capital cities are recording moderate growth. Sydney had 1.1% quarterly growth. Australia's largest inland city had 1% quarterly growth. Darwin 1% and Hobart 0.8%. And one capital city is flat. Melbourne had 0% quarterly growth. Owen, I'm wondering, those three cities that are standouts, Perth,
Yeah.
Adelaide, and Brisbane, why are they growing so much faster than the rest of the country?
Number of reasons. And yeah, we now manage in all three of those cities. And we're talking to buyers agents who are buying across the country for investors. And this would go for some of it would be relevant for owner occupiers as well, as why it would be a good place to buy. Is firstly, price point is a lot lower than Sydney and Melbourne, and it's the ability to get a decent property at a good price. And then for investors, especially, the rental return is a lot better than Sydney and Melbourne in those areas. And there's a lot more long-term potential growth. I mean, trying to buy in Sydney at the moment, I mean, the median house price is $1.5 million. It's just getting into the market is difficult, and let alone getting something that's decent with good growth, the way everyone wants to live, and that's got a good rental return. It's almost non-existent.
Another thing I noticed looking at these CoreLogic stats, Sydney recorded 8.7% annual growth, but only 1.1% quarterly growth. That left me wondering, is Sydney's growth cycle coming to an end?
Possibly, or at least slowing down. It's there's still a need for more property, so there's still an undersupply. While that undersupply is still existing, there'll still be upward pressure on prices. But it's in terms of when it's going to end, I mean, it just keeps on going. It's going to come down a lot to interest rates. What happens with that? There's a lot of talk about what's happening with interest rates. And yes, it's still got healthy growth.
And another city that caught my eye was Darwin. Darwin's median property price of 496,000 is still 5.8% below its peak, and that peak was reached in 2014, 10 years ago. Is there a lesson in that for property investors?
Yes, absolutely. I remember when about 10 years ago when Darwin was the place to buy. It was very popular, and it's just like, huh? It's every so often, and it happened with Hobart as well, where Hobart had this sudden surge in pricing a few years ago. And with these smaller capital cities, they will have these spurts in growth every so often. But they're unless they've got much larger populations, or there's a lot of industry growth happening there, Yeah, there's probably more potential in some regional areas that feed off the larger cities, or some of the regional areas that feed off large industry. So it's, yeah, you need to be, you need to look at the long term, or just have a very short term mindset about getting in, taking advantage of any growth that might be happening, and then getting out quickly.
In terms of Darwin's poor performance over the past 10 years, is it a case of the market being oversupplied or the city's economy not being diversified enough? All of the above, something else?
Yeah, it's probably a combination of all of the above. But you never know. It might be Darwin's time soon, and we're bringing the attention to the value that's there. Um, but there needs to be more than just, you know, a undersupply to draw people's attention to a place to buy. Needs to be livable, needs to be jobs, and all of those things. So yes, and I'm not sure what Darwin does have to offer to entice people to move there.
Okay, so you've alienated our Canberra and our Darwin listeners. Thank you for that. I've checked the weather report. Darwin is going to be 32 degrees today.
Wow. But isn't it for like between 30
Yes,
and 32 every day? Yeah.
it's 32 every day. Yes, so
Yeah,
I
and
haven't
it's
actually
gonna
checked the
and it's
weather
gonna
report.
rain at about 3 o'clock.
Quite possibly.
Okay, cool.
But I do love Darwin. So hello to all our Darwin listeners. Let's move on to our second story before we annoy any other listeners. Help to Buy scheme getting closer to launch. The federal government has invited public consultation for Help to Buy, its shared equity housing scheme that will make it easier for lower income Australians to buy a property. Under Help to Buy, the government will support eligible buyers to purchase a property by making an equity contribution of up to 40% for new homes and up to 30% for existing homes. Buyers will be able to enter the market with a deposit of as little as 2% without having to pay LMI. Property price caps will apply, and there will also be income thresholds of $90,000 for single buyers and a combined $120,000 for couples. The consultation period ends on May 21st. Keen to get your thoughts, Owen. Do you think Help to Buy is a good idea or a bad idea?
Um, it's not a bad idea, but it's not a blanket good idea. If that makes sense. It's targeted for specific people in specific areas. Yes, I can see the benefit. And it's going to be limited anyway in certain ways, but again, it's just another short-term gap that the government's providing, and it could help many people get into a property, and it's I mean, it's a way of the government being to have a piece of the action as well. So they might get a return on their investment. But we're still going to hit the same roadblock of a supply issue,
Mm.
and this is going to drive more demand. So the government keeps on bringing out these uh, schemes that will help individuals, which is great, but they're not coming out with a lot of ways to be able to help increase supply. Now, a lot of the time, if we focused on the supply issue and got that fixed, then we would be able to we wouldn't have to offer a lot of this support for individuals to be able to buy. So because the market would have taken care of the price issue. But I can see merit in some cases. Yeah.
Speaking of supply, the government will make an equity contribution of up to 30% for existing homes, but up to 40% for new homes. So is that a decent incentive to get more supply into the market?
Not really, because if someone wants to buy and they want to take advantage of this, if there's no new homes available, then I mean, what's their choice? It's just to try and buy something that's, and if that pushes prices up as a result, and it prices out more people, yeah. But I mean, yes, they've got some safeguards by limiting price, by putting price caps in there, and only certain people will be able to qualify for it, in terms of income and so on. So it's a limited scheme, designed to try and help the right people, but I yeah, the extra 10% for new builds. Yeah, it'll help some people, but I think those new builds would have been built anyway, and they would have been bought regardless.
Oh, and I noticed that with Help to Buy, the deposit requirement is only 2%. Is that the right number, or should the deposit requirement be higher?
I think it's a start, and for the type of people that the scheme is focused on, they might be limited to a 2% maximum anyway. So it shows the type of people that the scheme is designed to try and help. And yeah, so hopefully it works in some way for those specific people. Um, and but without the supply, yeah, we at the end of the day we need to fix that supply issue, no matter
Well,
what.
then you are going to love our third and final story today, which is all about supply. Home building approvals keep trending down. A total of 12,947 home building approvals were issued in March, which was down 2.2% year on year, according to the Australian Bureau of Statistics. There was a 7.3% increase in approvals for houses. However, there was a 16.8% reduction in approvals for other dwellings, i.e., apartments, townhouses, duplexes, and other residences. Housing Industry Association Chief Economist Tim Reardon said housing supply is failing to keep up with strong population growth, making an existing housing shortage even worse. Higher density housing development is being constrained by labour, material and finance costs and uncertainties, as well as cumbersome planning rules and punitive taxes, especially on foreign investors, he said. Owen, what will it mean for the sales and rental markets if building approvals stay at these low levels?
It's going to make the problem worse, Nick. It's got nothing to do with property investors owning properties now.
Mm.
It's got nothing to do with property investors wanting to buy more properties. It purely comes down to because we get hammered, by people making these accusations in comments on this podcast about what we're talking about property investors, and saying that it's all the property investors' fault, whereas it's not. We've had property investment for the whole time in this country, and never ever have we had high rental prices and high values of homes being blamed just on property investors as much as we do now. It's purely because of supply. And it's because of all of these reasons that were made worse by the COVID years, and with labour, material and finance costs and all of those uncertainties pushing up the pricing of new builds, which has made it harder to put new stock, new supply into the market. If we had more supply, there wouldn't be as much price pressure upwards on both values of properties as well as on rentals. And that's what it purely comes down to. There's no other reason.
We've got the federal budget coming up on May the 14th. There's a good chance the government will address housing supply in the budget. Are there any particular measures you'd like the government to take?
Um, we spoke about it in the last week or two, and it comes down to they can offer a lot of tax incentives to be able to provide more supply into the market, and that's probably the best way, because that'll help reduce costs for builders and developers to be able to get these properties built, and but then it's the red tape, getting these things approved and then built. So yeah, the first hurdle in a lot of cases is just getting them approved, and getting them approved quickly, and then starting to put a shovel into the dirt to be able to start building these properties. And that's the best way that we can have a major impact as soon as possible, to be able to help more supply get into the market.
Either way, there is going to be a cost that us as taxpayers have to bear. If we do what you suggested, the cost will be we collect less tax revenue. If, on the other hand, we don't put these incentives out there and housing supply fails to keep up with demand, that means prices and rents are going to go up, and we as consumers are going to have to pay more when we buy properties or when we rent properties. So either way, we as consumers and taxpayers are going to have to pay.
Yeah, exactly. So it's better for the government to have a stable property market that is has longevity to it, where it's not continually growing at double-digit growth, or even high single digits year after year after year. We need um, those flattened periods of stability in a property market to resettle the market, because that's what happens where when markets flatten in terms of any growth, it shows off where some areas are overpriced, shows off where some areas are underpriced, and it gives you time to be able to breathe and to be able to make decisions about where investment needs to be made in other areas within that housing market. So we need that stability of supply equaling the demand in the housing market.
On that note, Owen, thank you for another great chat.
All right, thanks, Nick. And yes, we'll be back next week, and hopefully not picking on any particular major capital city in this country.
Let's hope.
Thanks, Nick.